Let's talk about a bullish kicker. And as I've been going through these textbook versus reality series, I find that this is one that a lot of people don't know as well, this candlestick formation. So let's identify what it is. And like many candlestick formations, we're looking for either support or resistance. And this one, we're looking for it to come down to support. And as it nears that support, what we want to see is a big bearish candle, maybe very little wick. I mean, it can have some, right? But the idea is the bears open up the day and push it down to support. And then here is a very key component. The very next day, what we need to see is a gap. It needs to gap and run up, kind of reverse that momentum. And the psychology behind this is really important, where it shows the the bears were in charge and definitely pushing it to support, but then it had a very immediate, dramatic reversal as it not only took it back, but gapped and ran from there. And so that is, some will look at this as a stronger signal because it does have such a dramatic, reversal there. Take it for what it's worth. Let's look at a couple examples. In fact, here's one down here where we can see where price action came down to that support level. Down in here, there's a big bearish candle pushing it down. It gaps up and rallies from that point. And then, after that, this one happened to run on up. Not always the case, but that's what happened on this one. All right, so let's look at a couple other examples of this. And so here's kind of another kind of more of a textbook situation where price action comes down to support, even broke through it a little bit. Next day, boom, there's a sizable gap and a good run up from that point. Now notice this can often occur around an earnings announcement or some other news event, which is really the catalyst to make that dramatic reversal. Now, here's one that is not a bullish kicker. And why? Well, it's missing the gap, right? We see it coming down to support, but we don't have that gap. And so while the psychology and the sentiment is still there, it's not necessarily maybe as strong technically. The setup isn't as strong. There's not as big of a bullish push. There's not as much momentum behind it, but the thought and consideration is still there, right? And so we have to kind of weigh that out. Here's another one that is technically it is, but it's not quite the same setup because why? This one did not pull back to support. This was just it pulled back a little bit just before an earnings announcement and gapped up. We are looking for that big bearish candle at support and then the gap. Again, reminding you this is what it looks like. Comes back to support, big bearish candle, gap up and run up from there. So hopefully this helps clarify. In fact, bring us up to speed on what it is and clarify what it isn't and how we can go and apply those on our charts.